All right. Good morning, folks. Crazy week last week. I think things played out. I mean, if you remember the blogs, things kind of played out a little bit, like we expected. We had some back and forth. We bounced off the 20-day. We had that first initial thrust over our new resistance point, or our big resistance point, and now we've back and filled it. We've retested it. We've tapped it, and we've even broke the past high. So far, so good. Probably a big thing right now is the market is getting a little bit overbought, so we have to be obviously wary of that. That tends to lower the probabilities of second breakout. Plus, the other thing is from day one, we kind of figure if we broke 1151, our next target would be 1155. So we're really only one up day away from that. So um, let's be wary of that. As we've seen in the past, these things, when you break through a new level on the box, you tend to fill in for a few days. So, very rarely do you just break through onto the next level and then break above the next one. If that happens, that's probably be a little bit more cautious just because, you don't want to see things go straight up. But, right now what we're seeing is some positive action. Big thing to keep in mind today. We are starting earnings season. We don't want to be holding any stocks that are going to be having earnings season. Over the years, there's nearly no advantage of holding a stock through earnings unless it's a stock you're keeping for 5 years. For the simple fact that very rarely do companies just blow out earnings and then raise higher and then, announce some new product and where you just get this like huge bump. I mean, what you're looking for, if that happens, that's a 1 in 100 shot or a 1 in 50 shot. A 95% of the time, what's going to happen is, they're going to meet earnings or they're going to miss earnings, right? I mean, there's really only a couple ways you can go. And, so that's really probably not going to move the stock where it's going to drive it down. So, playing earnings is basically like, playing the lotto. It's very hard to nab. Very few people can do it. But that's just how it goes. Let's just take a look at some of the other indexes real quick. We're seeing some positivity in pretty much everything here. Where we go? Russell, Uncle Russell. Uncle Russell was very strong last week too. Basically made a move from the 670 range to almost 700. It's pretty nice. Similar pattern to the S&P. We have first level of resistance. Kind of right in this area. It's more like a zone. And if we pass this, we can really see a 725 or even possibly a break to high. So we definitely want to keep track of all this. But ideally, a pullback is nice. At least what we're seeing right now that's positive is that the dips are being bought. Anything close to major moving averages, these kind of pullbacks to the 20-day and often the 10-day are getting bought vigorously. And why? Who knows? I'm not in the prediction business of trying to figure out if it's a POMO thing or a QE thing or who. I mean, well, what we're going to be trading is the action, and the action so far was kind of telling us that we should be buying, and that's what we've been doing. Um, Keep in mind that oil is a very critical level for the simple fact that since the flash crash, oil has been in a range, right? And it's pretty tight range. It's about 10% or so, and it basically, every time it goes up, it comes back down, and we're kind of getting to the top of the range right now. We're at resistance. We're not overbought, so it's not necessarily a short, but what's our profit potential with oil right now? I mean, where do we see this thing going? I could definitely see a lot of stalling out probably at the 200-day moving average. Even if it breaks it, I mean, how high does it go? So that's, really where my worry is, especially with the market too, because, with oil being at the top of the range, it's very hard to, break out as a market. But I guess, with the dollar bombing, that's just going to be part of what's happening right now.